What next is the question everyone's asking after Greece gave a resounding no to EU's stringent bailout terms. Some call it bold, while others say it's foolhardy. But no one believes that the no vote will do Greece any good. Prime Minister Alexis Tsipras says the referendum is not against the EU, but a reflection of Greece's empty coffers, and in a gesture that could pave the way for fresh dialogue, Greece's hardline finance minister Yanis Varoufakis has stepped down.
And the Greek no vote has its creditors frowning. The Eurozone has blamed Tsipras for misleading his country, saying that the no vote has made things even more complicated. No one knows what's in store, but one thing is clear: Greece is now in uncharted waters. And for now, all eyes are on the crucial meeting between French President and the German Chancellor Angela Merkel, who will decide EU's next course of action. Gargi, we go to you first. How is this no vote being interpreted by Greek citizens, and what's really expected now from both the Greek government that's in charge and, of course, the European Central Bank?
Well, one thing is clear, that the people of Greece understand that there could be a possibility of a Brexit. Also could be a possibility that the euro may not be the currency of Greece anymore, but it's not going to be that easy to change both these things. It will take probably months, even years, to actually convert from euro to another currency. So all of that is important to remember. They've also said that the PM is going to go ahead and negotiate with the ECB for better proposal and an easier proposal for the country. Banks, nonetheless, will open on the 7th. That's whether it was a yes or a no vote. That was, a surety. ECB also says that there could be a new proposal that could be put, and news reports have been talking about that.
Greece's no is echoing all across the globe, but the crucial question, Tanveer, is what happens now? What's the road ahead for Greece?
Well, Greece has voted and it's allowed no. What happens next will be crucial. The EU in its reaction has said that the no vote has made things complicated. In fact, the Greek referendum referred to an expired program. The deal in the works that is being put on the table for negotiation again has some revised compromise clauses which both parties can find common ground on. Tomorrow, of course, the Eurozone heads of state will be meeting to understand and deliberate on the proposal that the Greek government extends out to them. The deadline has been set for tomorrow by the Greek government to work out a deal. Let's see what happens on that front. They're looming deadlines, by the way, that make the whole situation very risky for Greece, and especially first with the Greek banks. They need to continue to be provided with some sort of support on liquidity, and that would really depend on ECB's reaction in extending out their credit facility to the banks. So the insolvency of Greek banks is a risk. July 13th, there's a payment of 465 million euros that needs to be given out to the IMF, and then July 20th, they need to make a payment of 3.5 billion euros to the European Central Bank, failing which they will be officially announced as a default nation, and that could trigger off the process of a formal exit of Greece from the Eurozone.
Just to take that story forward on similar lines that Tanveer is pointing out there, Maithili Basnurmat, my question to you, Maithili, really is, will big economies like Italy, for instance, the third largest economy in that region, they have high debt to GDP ratio, will they take cue from Greece, and that's perhaps when the contagion will become too big to contain? And does this really threaten the existence of the European Union as a single currency bloc?
Well, yes, certainly what the crisis does suggest is that it questions the very raison d'etre of the European zone, European Union at the next level. So I think this is what you're going to see, because right from the beginning, when the euro was floated, it was seen as an alternative to the dollar. And clearly what this suggests, the crisis now suggests, that it's going to be a long, long time before the euro can ever remotely think of becoming an alternative to the US dollar. And mind you, we also have the UK referendum coming up in 2017, which the British Prime Minister Cameron has promised. And what the message does this send? A country like UK has emerged from the crisis, from the GFC, the global financial crisis, much faster, because while it was part of the European Union, it was never part of the euro. So Britain could cut its interest rates, it could go in for quantitative easing much earlier, much before the ECB could. So the message from this is it's good to be part of a European Union, which is like a trade union, but not good to be part of the euro. And I think that might signal the beginning of the breakup of the Eurozone.
All right, that's perspective coming in from Maithili, but let's talk about all the market action now.
Aisha, we did overcome the Greece referendum result jitters and other negative global cues that were coming our way, it seems.
Well, we overcame all odds today, be it the Greek referendum or for that matter, the China volatility. We came out with flying colors today. So what looked like a 1% down start, and even then, mind you, it wasn't a gap down start like some of the European or for that matter, the US or Asian equities for that matter were indicating earlier today. So 1% down start. We were clinging on to 8,400 for the better part of today's trading session. Didn't quite test that mark really today. And then, of course, the dash really came in the 9 minutes of trade. Actually, the latter part of today's trading session, 2 p.m. onwards, when we actually saw a vertical shoot up and recovered almost 1.5% from the lows of the day, finally managing close at the high point of the day above the 8,500 mark today. So really remarkable strength coming in for the markets. In fact, we've been the second best performer amongst the Asian market pack in today's trading session. So there we were, 8,500 conquered. Oil and gas really had a helping hand with crude prices dipping today. That augured very well for the entire OMC basket. So Reliance, HPBP, IOC managed to hold out. Pharmaceuticals were the strong one towards go, from the word go. You know, defensives really were in favor. So Orchid, Cipla, Sun Pharma, Biocon, Dr. Reddy's, they were all stupendous gainers. PSU banks as well really lend a helping an aiding hand in today's rally today. So a Federal Bank, Karnataka Bank, BOB, SBI, they all perked up very smartly. The other nifty gainers, the likes of ACC, Hero MotoCorp, Asian Paints, Coal India, they all held out very smartly. And within the mid-cap index, which actually outperformed today, remember the small and the mid-cap indices have managed to close in about 1 to 1.5% apiece in the green today. So NSRF, Aditya Birla Nuvo, Arvind, Crompton Greaves, these were some of the remarkable high flyers there. Handful of losers, Vedanta, NMDC, Tata Motors, largely sectorally, you'd have to say it was metals which were, you know, really the sour ones in today's session. But good day. Let's only hope the momentum continues. We'll catch you in the market and track all the developments forward.
Right, let's also get in quick perspective from Nikunj as well, trying to understand what explains the reaction that we saw in our equity markets. Nikunj, when we opened, it looked like we will end with deep gashes like most of our peers. But what led to the complete turnaround for our markets?
What a day of turn it's been for Indian stock markets on a day when fears of a Grexit clearly occupied all the dealing room conversations. Indian stock markets have moved independently of the global backdrop or the global noise. So why have Indian markets moved in a differentiated factor of late? There are three factors. Number one, compulsion. Number two, assumption. And number three, outlook. Given what has happened to China of late, global money managers have a compulsion to come back to India. There is assumption that economic outlook will improve, the capex cycle will pick up, and the second half for Indian economy will be better than the first half of this year. And there is the assumption that domestic institutional investors will continue to be price makers of this market, since domestic institutional investors are rampant buyers of stocks and they are supporting Indian stock markets on every decline. Well, the spirit of the market and the market behavior is clearly indicating that we are not done with the rally yet. Can we go to 9,000? Difficult to say, but next 10 days it's all about numbers, earnings, management commentary and the future projections for FY16. So we have to acknowledge the global environment. The global noise is crucial, but for an Indian investor, what really matters in the short term are two factors. Strength in dollar index, which could have an impact on commodity prices, great news for us, and earnings. If we don't see earnings revival in this quarter, it will be difficult to make a strong India case going forward. So watch out for earnings, not Greece or Euro.
All right, watch out for earnings is the word that's coming in from Nikunj Dalmia, but it wasn't just the equities that were the pain points across the world today. The commodity basket was also impacted hugely by Greek jitters. We've got Manisha Gupta, who tracks it very closely, joining us as well. Manisha, crude prices trading at a 3-month low. Is Greece the only concern that's pulling crude down?
Well, thank you so much for that. Well, major reason, of course, has been the Greece referendum. That's what's taken the prices down all over again. But apart from that as well, most of the other fundamentals also have been bearish for the prices. This is the first time in 3 months that you are seeing the Brent prices trade below $60 and the NYMEX breaching 55 on the lower side as well. The major reason really, of course, has been the US rig count, which has seen a gain up in the rig counts after 29 weeks of decline there. So we saw a gain about 12 rig counts there, and that is what tells you that that the supply from US shale gas is not really going out anywhere. Apart from that, it also is about the Chinese stock market, where there has been said that all new IPOs will now be halted and central bank will help investors put money in equities. So while the Chinese data has been all on the weaker side and there have been some reforms taken, markets really do not seem to be agreeing with that or giving any positive response to that one. Apart from that, the major reason, of course, is the Iran deal. The deadline for that is tomorrow, that is 7 July. There have been negotiations that have continued in last 6 months now between US and other major powers and Iran there. If the sanctions are lifted, if it goes positive, then you might see Iran exports into the global market double up, and that is what really is worrying the crude oil prices at this point in time. And then you have the strength in US dollar, you have near record output coming in from Russia and OPEC as well, and that seems to be putting pressure on prices too. We have broken below $55 and $52 per barrel on the NYMEX is now your next support coming in, so further decline not ruled out into this space as well.
All right, each one of you, thanks very much for joining us right here on Business Tonight with a 360-degree perspective on what's really happening in Greece and how it's impacting all our lives across the world. Thanks very much indeed for being with us on this big Greek debate.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.